I get asked a lot, understandably, what are the downsides or the cons of doing a reverse mortgage? And to be completely honest, I think this is a tough topic to address. And not because I don't think there are any downsides to the loan per se, but because of the fact that when it comes to any product, I think it's vital to first know and understand the upside before you're able to fully understand the implications of the downside. So, today I'm going to do my best to explain the most common perceived downsides to a reverse mortgage and also hopefully give you a bit more context as to those implications as well. Hi, everyone. Welcome back if this isn't your first rodeo with us. And for those of you who may be first time viewers, my name is Taryn Proctor. I am the president of Retirement Home Equity Advisors. We are a mortgage brokerage specializing exclusively in reverse mortgage financing. So I know you all are probably chomping at the bit to hear what the downsides are to a reverse mortgage. And I'm sure some of you are hoping to give some credence to the negative stories or things that you've heard of in the past that don't paint reverse mortgages in a very good light. So I think if that's what you're after today, I hate to tell you, you're probably going to be disappointed. Most often, when I go over these downsides with my clients, and of course, at the same time, we're also going over the upsides as well. But many times, their reaction is, "Oh, I thought it was much worse or different than that. I wasn't expecting that." And the reason for that is, for them at least, the quote unquote downsides were something they were completely comfortable with and thought were reasonable for what they were receiving from the upsides. Ultimately, it's important to know and be aware of the pros and the cons so that at the end of the day, when you make that decision about whether a reverse mortgage is a good fit for you or not, that be a well-informed decision. So here we go. All right. Arguably, the biggest downside to a reverse mortgage is ironically caused by one of the biggest upsides. The upside is that you no longer have a required monthly principal and interest payment. And the downside that this causes is if you are no longer paying the interest that you're incurring month over month, nor are paying down the principal balance year after year, what you wind up with is an increasing loan balance over time. This means at the end of a reverse mortgage loan, you no doubt will have less equity available than you would have if you continued being forced to make a monthly payment. But that's the whole point of a reverse mortgage in the first place, right? I mean, this loan gives you the ability to access your equity without having to sell your home. So I think it's a given that because you are using the equity, there will be less of it at the end of the day. How much less is going to be drastically different from one person to the next and will depend on how you utilize the loan as well. Really important to note here that you actually have a lot of control over how this plays out over time, though. And to be fair, you can make a payment towards your reverse mortgage if you'd like. You can pay what you want, when you want, and however much you want, actually making this the most flexible loan in this country. So that feature actually gives you a lot of control over legacy planning as well, if that's something that greatly concerns you. Or in other words, gives you control to manage that equity position if you are hoping to leave the home to any heirs. But the reality is, most people do choose not to make a payment because that, after all, is the point for them. And those that do make payments are usually using the reverse mortgage more strategically financially, or they simply want the flexibility to halt payments at any time, really giving themselves kind of a win-win situation there. Either way, it's your choice, which is why it is always important to discuss all of the different ways that you can utilize your reverse mortgage with your loan officer and discuss the implications of each scenario with them. Now, number two is closing costs. If you have never entered into a federally backed loan before, the costs of a reverse mortgage may surprise you. Federally backed loans, such as a regular FHA loan or a VA loan, or of course the reverse mortgage loan, are federally insured or backed by the federal government. The reason for this backing is because these loans are inherently more risky loans to lenders. What this means is the requirements and qualifications for these loans are much more lax than conventional loans. For example, you don't have to have as good of a credit score. You don't have to put as much money down for a regular FHA loan or any money down for a VA loan. And you don't have a required monthly mortgage payment with a reverse mortgage. So, because of these facts, these loans are more risky to the lender and actually to you as well under certain circumstances. That's why they require the government to back them or insure them to the lender. And in the case of the reverse mortgage, making it more safe and secure for you. And unfortunately, we all know the government doesn't do anything for free as much as they like to say they do. So on a reverse mortgage, the government charges for this insurance, just like other government backed mortgages, which typically is going to be what pushes you above the normal range of what you're used to seeing from conventional loans. Now, unlike other government backed loans, what you get from the insurance for the reverse mortgage loan is much more valuable. Other government backed loans, you basically only get the benefit of the more relaxed underwriting criteria. Now, that's pretty beneficial in and of itself, and especially for the VA loan. I think that is one of the most advantageous benefits our veterans have access to. But nonetheless, I think what you get for the federal insurance on a reverse mortgage is even more beneficial. The insurance alone makes the loan possible and allows for the flexible repayment feature. It also gives the reverse mortgage what's called its non-recourse feature. That means that you nor your heirs or your estate can ever owe more than the value of the home itself. So if you ever become upside down on the loan, because remember, most folks have an increasing loan balance with a reverse mortgage. So let's say your home loses a significant amount of value in the future and you wind up becoming upside down on the loan. The government will actually step in and pay the lender that difference. And you effectively never having the risk of being liable for the balance if you become upside down is really as secure as it gets when it comes to mortgages. Not only that, but this government backing also guarantees the terms of the loan in general. To be more specific, you have the ability to structure your reverse mortgage with a credit line. That means any proceeds you may qualify for after your traditional mortgage gets paid off and closing costs are paid can be kept in a line of credit for you. The line of credit somewhat acts like a HELOC, whereas any money that's left in there will not be charged an interest until you pull money out. But the importance of me bringing this credit line up when it comes to the government backing is because that federal insurance guarantees that credit line to you. That means that as long as your loan is in good standing, the credit line cannot be canceled, frozen, or reduced for any reason. That is absolutely different than a HELOC, as a HELOC can be frozen, canceled, or reduced. And lastly, and even better, the credit line has what's called a growth factor built into it. That means whatever money you leave in there will grow at the same rate that your loan balance is charged for loan interest and mortgage insurance. And that growth rate and the line itself is guaranteed to you by that federal backing, independent of your home's value, which means if your home loses value, that credit line will still always be there for you and will even continue to grow, making this feature of the loan an incredible hedge against home depreciation. So, with a reverse mortgage, yes, the federal government does charge for the insurance, just like on other government backed mortgages. And at the end of the day, the big question is, do the benefits outweigh the cost? And for many people, not everyone, but many, that answer is yes. Lastly, the third downside to a reverse mortgage lies in one of the primary requirements for the loan. This requires the home to be and remain your principal residence throughout the life of the loan. Now, this isn't as big of a perceived downside as the first two, but it's still something that could be a downside to some. Because if something were to happen to where you needed to leave the home permanently, that is something that could cause the full loan amount to become due. Now, in many of these types of scenarios, the home would be sold anyway, but for those in that situation who may actually want to keep the home, the mortgage would need to be satisfied one way or another. But typically, this is more of something to be fully aware of so that you can plan for and mitigate a headache in the future if this situation ever arises. So there you have it, folks. Those generally are what would be considered to be the biggest downsides to the reverse mortgage. But in my humble opinion, your reverse mortgage research shouldn't consist solely of researching the negatives. Because let's face it, for any product out there, and especially a financial product such as a reverse mortgage, you need to figure out if the juice is worth the squeeze, so to speak. And you can only do that by thoroughly investigating what the juice is as much as the squeeze. Or, in other words, the pros are just as important as the cons. Learning the good, bad, and everywhere in between, and then coming to a conclusion that way. So, if you or someone you know wants to delve into more about the pros and cons and what those implications may specifically be for you, then give me a call. I'm always here for you at 888-982-0475. I will always be incredibly transparent with you about your options, and I'm happy to break down all of these things in detail so that you can make that well-informed decision on whether a reverse mortgage is a good fit or not. And as always, if you found this video helpful and want to see more, don't be shy and hit that like button below. And while you're at it, subscribe as well. Thanks for watching, and I'll see you next time.